Everyone's talking about a Mar-a-Lago Accord. It's an attempt to get other countries to agree to help the US deal with the negative consequences of globalization. That's the decline of US manufacturing, the rise in inequality, without having to sacrifice the advantages that the US gets from globalization, such as low inflation, low interest rates, capital flowing into the US stock market. There's really no way you can make all of those things happen at once unless other countries agree to intervene in their markets. That's why there would need to be an accord. We can't talk about the Mar-a-Lago Accord without going back to the Plaza Accord of 1985, named after the New York hotel where it was made and which shortly after was owned by Donald Trump for a while. It was definitely a success for the US, and it definitely really weakened the dollar. It was not so much of a success, to put it mildly, for the other countries that agreed to go along with it, particularly Japan. The problem now is that in that instance, you had a few countries, all of whom happened to be part of the US security umbrella, that were trying to agree on something. This time around, if you wanted a deal, you would have to include China in it, who plainly have much more of a confrontational relationship with the US than any of the powers did then. The whole foreign exchange market is 7 or 8 times bigger, depending on how you measure it, than it was then. So intervening is far harder to make work. The market is fascinated by the whole concept. Say the consensus at the moment is that it probably can't happen. That's why you've seen a big shift out of the US and into other foreign stock markets. Whether that continues, that's going to depend on exactly what we hear from the tariffs. It's going to depend on whether the rest of the world, particularly Europe, really can get its act together. It hasn't done for a while. And perhaps most of all, whether there is any kind of a Mar-a-Lago Accord that can be reached.